Welcome, ladies and gentlemen, to the new year. Of course, Happy New Year to all of you. I hope everybody is healthy and sound and safe and doing well. And we start our virtual Swiss Resource Capital series here with Fiore Gold again. We had Tim Warman already 2 times here into our virtual roadshows. And of course, he wants to give us in approximately a minute an update. But first of all, also, Tim, very warm welcome here to you. Good morning. Hope you're fine.
Good morning.
Yeah, great to have you here. Thank you very much. Our attendees are still checking in. I see that here. That's great. And yeah, so we are starting the year with a gold producer and a very successful company, as some of you are already shareholders, I know, and most of you know the company. And yeah, gold and silver looks very interesting these days. We have a very bumpy road today. Also, like before the trading started in New York, really, we had like in 2-3 minutes, gold went down over $20. And it looks like that the Phantom of the Opera is still playing some fancy games with us. But I think a lot of money is still printed. And so for that sake, we will see a lot more gold holdings and gold buyers. But this is why we have to talk also about gold miners. Before we start with our presentation here and Tim presenting to us for Fiore Gold in a second, I have to do some notes. First of all, as we had it last year, we fully comply to DSVGO data security law in Europe and also in Switzerland and in Great Britain, as they has left the European Union. And of course, very important, nobody can see the name and nobody can see any emails. I encourage you really to use the chat function. The chat function is the 3rd button in the vertical gray bar. And please type your questions in there. And after Tim's presentation, we want to have a lively discussion and a nice Q&A, of course. And I see already 53 people are checked in. That is fantastic. I think I will put up the presentation here for you, Tim. And 55 now. That's great. And I would say we can start. And yeah, Tim, the floor is yours.
That's great. Thanks, Jochen. And thanks, everyone, for joining us today. As Jochen said, I'm Tim Warman, the CEO of Fiore Gold. For those of you who aren't familiar with Fiore, Fiore has been around in its current format since September of 2017, when we acquired the assets of the bankrupt Midway Gold in Nevada and elsewhere in the US. We turned around the Pan mine, which was their primary asset, put that back into production. It's been running for 3 years now and generating very strong cash flow. And that cash flow is what's being used and reinvested to grow the company. Besides Pan, just 8 miles or 12 kilometers away is our Gold Rock project. This is a permitted development project. We just put out a PEA on it last year. We're currently working on a feasibility study for that with the goal of having Gold Rock in production sometime in late 2023 or early 2024. That will more than double production in Nevada to over 100,000 ounces per year, working in conjunction with Pan. And Gold Rock being so close to Pan is really more of an expansion project or a satellite operation than it is a standalone mine. We've developed a very, very strong operating team, as can be judged by the performance of Pan. And that operating team, we're quite keen to leverage that expertise on new projects. So we've been doing quite a lot of work evaluating potential new additions to the company in terms of near-term production or currently producing assets, ideally focused on the United States. And then finally, we picked up a 3rd asset called Golden Eagle. This also came out of the bankruptcy transaction. And I should point out that we picked up all of these assets for $5 million back in 2016. And so Golden Eagle is a bit of a hidden gem, I guess, within the company. 2 million ounces of M&I resources in Washington State. But I think that project would make a really nice core for a spin-out company. And I'll talk a little bit about that, why I think that. As I said, we are 100% U.S. production and growth focused. 2 projects, Pan and Gold Rock in Nevada and Golden Eagle in Washington State. For those of you who aren't familiar with Nevada, if Nevada was a country, it would be the 5th largest global producer. 75% of U.S. gold production comes out of there, and it's ranked as the 3rd most attractive global mining jurisdiction. So really a solid and safe jurisdiction to be producing in. COVID-19 obviously impacting just about every aspect of our lives, including mining. We've been very fortunate in being able to manage the impacts on that. Obviously everyone who's working at home, who can work from home at the mine site, taking lots of precautions, keeping people separated, masks, cleaning, all the rest of the things. To date, we haven't seen any huge impacts on production. We occasionally have some people who are away for, while they get tested or if they're feeling ill. We make sure that people are able to stay home and not have to come into work. We want to keep everybody safe, and so far we've been pretty successful at that. I'll just talk a bit about the Pan mine. This is a typical open pit heap leach mine. Nice shot of it there. Those are the blast hole rigs getting ready to put explosives in to blast another bench. Very common type of mine in Nevada. Here it is from overhead. And the mine layout is pretty simple. There's two pits, the north pit and the south pit, very imaginatively named. There's a major fault that runs through the middle of both of those pits from north to south, called the Branham Fault. That Branham Fault is what controls the mineralization at Pan. We mine from both of those pits. We bring the ore down to the leach pad. There's a crushing circuit set up on the corner of the leach pad. We crush the ore, blend it from the two pits, put it on the leach pad, leach it, and recover gold in the ADR plant down at the bottom of the picture there. It's a pretty simple operation. We only produce gold doré that we sell to the refiners. There's no silver, there's no copper. It's a very efficiently run mine. And one of the, I think, tells about how efficiently a mine is run is the safety record. We have never had a lost time injury in the history of the mine under Fiore Gold's control. And we have won the Nevada Small Mine Safety Award from the Nevada Mining Association every year that we've been in operation. It's a really excellent record and just speaks to the level of detail and level of attention that is paid to the project and the operation by our operating team. Looking back at our full year 2020 production, you can see gold ounces produced, sort of mid 40,000s. It was a very strong year, a little bit of an increase from the previous year. You look at our all-in sustaining costs sitting at just over $1,000, and very, very strong operating cash flow generated by the mine. And it's this operating cash flow. I mean, on a per share metric, you're looking at 2020 cash flow per share of 24 cents per share, adjusted EPS of 18 cents per share. These are really strong metrics, particularly if you look at the universe of small producers. And of course, you look at Q4, we actually just put out our Q1 of 2021. And just for those of you who don't know, we have an offset fiscal year. Our fiscal year ends at the end of September. So we've just wrapped up our Q1 of fiscal 2021. But again, a very strong quarter, 10 cents per share of cash flow out of that last quarter, 19 cents or say 9 cents adjusted EPS. So really strong metrics. This current quarter that we released today, a little lighter gold production, that was expected. We knew we were going to be placing slightly less tons at a slightly lower grade on the pad. And we also had a few operational issues that we are well on the way to fixing with the leach pad chemistry. Not a major or long-term issue, but it did result in slightly reduced gold production this quarter. We expect the gold production this year is going to be weighted to the second half of the year. And I'll get to the guidance slide. It's going to look very similar to last year. So here's the guidance slide, somewhere between 44 and 47,000 ounces per year, again, weighted to the second half of the year. Cash costs between $1,050 and $1,100. All-in sustaining costs at a corporate level, going to be a little higher this year, between $1,300 and $1,350. That's for a couple of reasons. One is we're in a slightly higher stripping phase this year. The life of mine strip ratio for the remaining life of mine is about 1.66 to 1. And just for those of you who aren't familiar, stripping ratio is basically the ratio of the number of tons of waste rock for which we don't make any money that we have to move for every ton of ore, which is where we make our money. So in this case, we have to move 1.66 tons on average of waste for every ton of ore. This year, we'll be moving about 1.8 tons of waste per ton of ore, and that will push the costs up a little bit. And of course, we're seeing cost inflation in terms of primarily wages in Nevada. It's a very strong market for labor in Nevada. A lot of mines going there. It's a very active economy, and we are seeing some wage pressure. But I think we've done a pretty good job overall of controlling the costs that we're able to control. Non-sustaining capital, we'll be looking at about $20 million, mainly on leach pad construction, which is underway to accommodate the additional mine life that we've just announced, and also on our Gold Rock project, pushing Gold Rock through feasibility, a lot of drilling there, and a lot of metallurgical test work as well. So if you look at the Pan mine, what's the future upside? Well, there is a possibility to increase gold production there through increased throughput. We currently mine at about 14,000 tons of ore per day. The mine is permitted to go up to 17,000 tons per day. It's something we're looking at. We'd have to debottleneck the crushing circuit, but that's something that'll be reviewed this year. One of the key things about Pan, though, is that when we bought this mine, it had a relatively short mine life. We knew that. It was part of the reason why we were able to buy it and all the other assets for just $5 million. But we knew that there was excellent potential there to continue to drill, to continue to explore, and to continue to extend the life of mine. And I think our track record over the past 3 years has really demonstrated that. So if you look on the right-hand side there, that map, you can see the North Pit and the South Pit. And those red zones that you see there, those are exploration targets that were defined by surface mapping, surface sampling. There's gold in soils, there's arsenic and antimony in soils. And all of those targets, except for one, remain to be drilled. And the one that was drilled, the Mustang target, was the first one of these that we drilled last year. We had some very good hits there. Not enough drilling there to bring it into the resource and the reserve update, but we will be going back this year and putting more holes in there to try and drill that out at a sufficient density of drill holes to bring it into the resources. We'll also be testing a lot of these other targets you see in red here. Geologically, this area is wide open. From a land package, we're not constrained by claim boundaries. We have about 200 square kilometers of contiguous concessions here, so a very large land area. And if you look at the graph on the left there, you'll see, since 2017, you see the measured and indicated resources in orange, the reserves in blue. And you can see that we've been able to hold those pretty constant despite 3 years of mining depletion. So we've been able to very, very successfully replace existing and reserves and resources as we mine through them. And, this mine is probably never going to have a 10-year mine life, but I think 10 years from now, it'll probably have a 5-year mine life. And we typically spend $1.5 million to $2 million a year on drilling to make sure that happens. So, Pan is proceeding pretty nicely. And really the focus now in terms of growth is on our Gold Rock project. As I said, Gold Rock is about 8 miles or about 12 kilometers away from Pan. Pan would sit just behind that little low row of hills in the distance there. There's a small open pit left over from mining operations in the late 1980s and early 90s at Gold Rock. One of the things that pit does is show us a very nice view of the ore body. You see some kind of pinkish whitish rocks in the back wall of that pit. That is the mineralization. And it's in a fold structure in the rocks. And that fold structure runs for somewhere around 20 kilometers through that site, from one end of the property boundary to the other. Very little of that has been drilled out, as I'll show in a couple of slides from now. The other thing it shows us is that there are very steep pit walls there. And we think we are, as we move from the PEA to the feasibility study, we'll be able to, in the design, steepen up the pit walls from what we had in the PEA. That will have the effect of reducing the stripping ratio, should reduce our CapEx and our OpEx as well. So again, an opportunity to improve the economics. This is a map of Gold Rock and Pan together. You see Pan up in the upper left there. The red zone is the area of defined resources and reserves. The yellow are the exploration targets. And likewise down at Gold Rock, the red area are the known resources. The yellow area are some of the exploration targets. You can see it's quite a large land package, as I said, 200 square kilometers. It's just south of the Highway 50, which is a paved 2-lane highway that runs through this part of Nevada. Now we're about an hour outside of the town of Ely, Nevada, which is where most of our staff live. There's no camp here. We have electrical grid power to site. So really, it's from an infrastructure basis, it's an excellent location to be in. About 400,000 ounces of resources at Gold Rock right now in the indicated category, but another 84,000 in inferred. We're doing a fairly significant drilling program there this year, about 100,000 feet of exploration drilling and about another 98,000 feet of geotech, metallurgy, condemnation drilling as we move into that feasibility or through that feasibility study process. And we're hoping to have a resource update out later on this year. Hoping really to grow that deposit. I've set a target of 750,000 ounces. We'll see if we get there. One of the key things as well is that it's 30% higher grade than at Pan, which is a big advantage as well. Once this goes into production, as envisaged by the PEA, as I said, it will be really more of a satellite operation than a standalone mine. We'll use the same access road, we'll use the same power line, we'll use the same management and operating team, we'll use the same mining contractor. really trying to leverage as much as possible of the infrastructure that already exists at Pan for running both operations. In fact, the goal going forward is to be able to just have the leaching facilities and the open pits down at Gold Rock, and then truck what's called loaded carbon up to the existing facilities at Pan, where we'll strip the gold off the carbon, use the refinery at Pan to produce gold doré for both mines to sell to the refineries. So it should show a lot of synergies, which will help with both the capital and the operating costs for both mines. The tentative profile from the PEA is about 56,000 ounces of gold per year. Combined with Pan, that will take us up over 100,000 ounces of gold per year. And you can see some of the economic metrics. It starts to look really good at $1,700 gold at sort of current prices in that those $1,800 gold range. It looks really impressive, and I think those economics are only going to improve as we go through a lot of the optimization strategies in the feasibility study. I'll just mention Golden Eagle briefly. This is this kind of overlooked third asset that I think is kind of a hidden gem. 2 million ounces, open pitable resource in Washington State, just outside the town of Republic, Washington. It's very close to the Canadian border. It's in a historical mining district. There's been mining in the Republic district from the 1800s right up until 2017, which is when Kinross put the last 2 mines in the area on care and maintenance. The biggest issue we have with Golden Eagle is that in order to put an open pit in here, we would need to get what's called a layback agreement from our neighbors. And our neighbors in this case are Hecla. Hecla has quite a large land package surrounding us. They're very actively exploring. They're actively drilling on that. We've been told informally that they have something like 1.5 million to 2 million ounces already outlined, not to 43-101 standards, but they think they can get it there. And so what we've actually talked to them about, not just with the idea of getting a layback agreement to allow us to mine the edges of the pit into their property, but is maybe to put the projects together and combine these into a JV. And we think that JV would be pretty, I think, attractively valued by the market. And I'll show you a table of comparable projects on the next slide. But I will say the negotiations with Hecla have been slow, slower than I would have liked. Fortunately for Fiore, the carrying costs of this project are about $10,000 a year. So it's really no effort for us to hang on to this project as we push ahead with these discussions. But just to give you a sense of why I think it would be a good spin-out project, right now on its own, we don't think Golden Eagle is giving any value at all to Fiore. We think Fiore's current market cap in that sort of 140 million Canadian range is really supported exclusively by Pan and by Gold Rock next door, our Nevada assets. Golden Eagle, though, if it were to be spun out, as a standalone company, it would have a 2 million ounce resource at that kind of early pre-permitting steady stage, very similar in size to Integra Resources' DeLamar project in Idaho, right next door, another Northwest project at a similar stage. Right now, Integra's market cap on that one project alone is well north of 200 million Canadian dollars. So, if you're going to take it as a comparable, Golden Eagle is a very similar size project in a similar jurisdiction at a similar stage. And we think it could potentially be valued even more than Fiore is right now. If you were to combine that with Hecla's project next door, you'd really push that up into the sort of second or third largest undeveloped gold project in the US that's not held by one of the majors. And, that starts to look more like Midas Gold, which has a Canadian $500 million market cap. Anyway, so lots of value to be unlocked there, and we'll be pushing ahead on that as quickly as we can. Very simple capital structure, 98 million shares outstanding, 8.7 million options. There's no warrants. You look at our cash position there, 23 million at the last quarter. We're down a little bit from that as we've been spending quite a bit on our Gold Rock project, on the heap leach expansion to accommodate the longer mine life at Pan. I think our current cash is down around 19 million US, so not much of a dip, but it is a bit of a spending period right now. Very, very strong working capital position. And again, a market cap sitting in that kind of $140 million Canadian range, and some very good analyst coverage as well. We don't have any major shareholders. Our largest shareholders are Kinross at about 5% and a couple of funds out of New York. But there's no sort of controlling major shareholder. Management and directors own about 5% of the stock. And even though the share price has had a pretty good run over the last year, I think there's still a long way to go, because I think on just about any comparative metric relative to our peer group of small producers, small developers, we're still quite undervalued. And I think, it's particularly notable when you look at some of these other peer group companies that are quite frankly working in some pretty dodgy jurisdictions, Papua New Guinea, Nicaragua, Mexico, really, can't hold a candle to someplace like Nevada, first world country, with nose mining and stable politics and whatnot. So anyway, I'm hoping as we continue to perform and continue to grow the company, we'll start to see a bit of a re-rate just based on jurisdiction alone. So, just to kind of wrap up, I think we in general, we try to under-promise and over-deliver. I think we've been pretty successful so far. We took a bankrupt asset, turned it around, got it generating cash flow. We put a crushing circuit in at Pan. We've updated the reserves and resources for a second time, which continues to extend our mine life now into 2025. We got our adjacent Gold Rock project through the federal permitting process, put out a PEA, straight into a feasibility study. Got our resource update out for Golden Eagle that shows 2 million ounces of M&I resources there. And there's going to be a lot more to come over the rest of the year. Lots of exploration drilling results, both from Gold Rock and from Pan. We'll have the feasibility work, the metallurgical work, and all the rest. We'll have news on that throughout 2021. And we'll have and some regional exploration results as well. We're hoping to be able to actually get boots on the ground and go out and start identifying new targets on that big 200 square kilometer land package. And then finally, really looking forward to maybe being able to do some M&A transactions this year. It's been a bit of a tougher slog than we would have hoped, trying to find good assets out there. But we think there are some good assets that can be brought in and bolted onto the company to help us grow a little more quickly than waiting for Gold Rock to come in 2023, 2024. I think that's about it. I'll just leave you with a nice shot of the pit with the snowy mountains of Nevada in the background, and happy to take any questions.
Super, Tim. Thank you very much. And at that photo we see, this is from where the money comes. I like it. Fantastic. Yeah, great presentation. Thank you very much. And it looks like so far that everything is really in good shape. Yeah, let's have a look. Okay, the first, because I have to read here also, from where comes the name Fiore? Maybe you can say that shortly.
Yeah, it's so this company was actually started back in 2015 as an exploration company that was more focused on Latin America. And the name comes from a guy named Frank Giustra, who is a mining investor in Canada. Fiore is kind of his personal brand. And, Frank actually hasn't been involved with the company since about 2017. But, we thought about changing the name to kind of reflect that. But we couldn't think of a better name. And we also I think we've kind of built a brand around the name, and didn't really want to lose that. So anyway,
okay. Super. Yeah, no problem. That happens with the phone.
Yeah. My phone came up for some reason.
Yeah, no problem. Yeah, okay. Then let's talk shortly before we go a little bit more in medias res here about your Q1 numbers, which just came out, and I think it was 9,204 ounces of gold production, and the cash is $19.2 million. You said that already. Important is to say you have no debt. I think this is really super important. And I just did some mathematics because you are working on a PE of 8 today approximately. Yeah. This is really cheap. So maybe you can comment a bit more in detail on the last quarter, and also maybe on the problem, or the small problem you had on the leach pad with the pH value, which was too low.
Yeah. So this last quarter, we were expecting it to be a slightly lower quarter anywhere, because we had less tons in the mine plan at a slightly lower grade. The grade fluctuates throughout the mine plan, which is typical for any mine. In this case, we ran into a little bit of a problem with what's called the pH. It's the chemistry of the leach pad, how acidic or how alkaline it is. And in a leach operation, you have to keep the pH ideally above about 10.5, and probably better to have it up around 11. That helps the cyanide stay in solution. It helps it be available to dissolve the gold. In this case, we made some changeovers in how we operate when we put the crushing circuit in about a year ago. We moved over from lime to cement. Anyway, what we found was that wasn't controlling the pH properly. The pH drifted lower, and then we had less cyanide in the solution. We were able to leach less gold out. That has been addressed, and problem is being corrected right now. And we don't see that as a long-term problem going forward. And I think we've got a really good operating team who identified the problem, who acted quickly to solve it, and I think that's under control.
What price are you achieving for gold today? Is Peter asking from Zurich?
I think in our last quarter, I think it was 1868 was the average selling price. Yeah, so it's a pretty decent price.
Okay, that is fantastic. Actually,
We're
that's
we're
right.
not hedged in any way, so it's whatever spot is at the time
Yeah.
we sell. We don't try to play the market on that, so we're completely unhedged.
Okay, super. Let's start with Penn. You said the mine life is now 2025, so you enlarged it again by 2 years. So, and also you said you put in approximately $1.5 to $2 million per year in exploration, right? So it looks to me like this is a very successful exploration. And what could you imagine if you think on Penn on the one hand, and then Gold Rock on the other hand, as well, let's call it satellite deposit. What do you think for, let's say, the next years to enlarge production, to bring Gold Rock in production? When do you think this could happen?
Yeah, so I mean, I think Gold Rock, the idea would be to finish construction on Gold Rock in 2023, start stacking ore. With the leach program, there's always a bit of a delay between when you stack your first ore on the leach pads and when you actually start getting significant gold out. So it would probably be 2024 would be our first full year of production. But combined with Pan, assuming we can, and under the current mine plan, there doesn't seem to be any issue with that. But with production levels at a similar level to what they are now, we'd be up over 100,000 ounces a year by 2024. And ideally, we'll be able to get that production rate up sooner by bringing in other assets. There may be an opportunity to increase production levels slightly at Pan. That won't be a major change. Might be 4,000 or 5,000 ounces extra by increasing the mining rate. And again, that's something we're studying right now.
Okay, as you said, you're currently doing 14,000 tons per day. You can go up to 17,000 tons per day, but also with keeping the grade you have so far, right?
Yeah, that's the idea. Yeah, we just put more rock through the crusher. We would have to make some modifications to the crusher. Right now, it's probably maxed out about where it is now. And that is something we're studying to see if that makes sense.
Would that mean that you can, let's say, finance with that extra cash then if you would do that Gold Rock to bring it in production?
Yeah, I suspect we're still going to have to, take on a sort of debt equity mix to fully finance the construction of Gold Rock. I don't think Pan is going to, Pan is a nice mine, but it's a smallish mine. It throws off good cash flow. So far, we've been self-financed. One of the great things about the company is since 2017, we haven't done an equity raise. We've got the same number of shares outstanding as we did in September 2017, and again without taking on debt. So Pan's been great for that. But in terms of actually building the full mine, no, it's probably not capable of that.
Okay, super. So mine life we have this. Okay. Talking about the cost inflation you had and also about the higher stripping ratio. Do you think you can bring that back to the levels you had before? Because $1,350 per ounce is more on the higher side, I would say. And with the strip ratio now at 1.8 to 1, if you could bring it back, let's say to the 1.2, 1.3 level, that would be quite favorable.
Yeah, I think the stripping ratio will definitely come down. Because we're mining at higher than the average right now. As we go forward and get through this year, it should come down to slightly below the average. So yeah, it will come back down. In terms of some of the other cost pressures, there's not a lot you can do about it. If you want to have workers at site, you've got to pay the prevailing wage in Nevada, and there's a lot of competition for staff right now. You've got the big Nevada gold mines, which is the Barrick-Newmont joint venture. They're ramping up. We've got new mines opening up in Nevada, and so that one is a bit inescapable, unfortunately. But as I say, I think we've done a really good job at keeping our cost profile pretty steady over the last little while. And we'll obviously keep focusing on that going forward.
Fantastic. Just in between a political question, do you see any changes coming up for the mining industry in the US now with President Biden?
That's a good question. Nothing's really been telegraphed in terms of changes. I think you'll see maybe a more renewed focus on permitting, which fortunately we don't have to do because we're through the permitting process at the federal level. It's difficult to say. We obviously keep a very close eye on it. The whole mining industry, I think has organizations. There's the Nevada Mining Association and whatnot that acts, on behalf of the whole industry to try and address some of these things. Like I said, I haven't seen anything specific come out of it yet, but yeah, I expect that it will, but it's interesting because, a lot of people said, well, when Trump gets in, he's going to make things easy. He's going to make permitting easy. He's going to speed everything up, get rid of all this red tape. But, the whole US system is just set up not to do anything quickly. And we just didn't see it. There were all these executive orders saying, oh, you have to complete these things within a year. Well, show me a project that got permitted in a year. It just,
never ever.
Yeah.
Yeah, that's right. Can you also work in the winter on the same path like in the summer? Meaning, do you have any problems in the winter? Let's say with the leach, is the leaching slower, or is it tougher to do so? Or do you face any problems, let's say, with snow that the trucks cannot work properly?
Yeah, no, we don't seem to have any issues with that. We obviously have to be careful and make sure that the roads are cleared and make sure that the traction is good and things like that. But yeah, no, leach pad chemistry, we're not in the Arctic. It's in Nevada. We're up in the high desert at about 6,000 feet or about 2,000 meters in elevation. So we get snow. We don't typically have snow all year round. We'll get a snowstorm. It will stick around for a little while and then it will melt. Yeah. So anyway, no. I mean, we have to be a little more careful in winter, just like with anything. But overall, it's not really an issue.
Okay, super. Before we move to Golden Eagle, you said you want to do M&A. Are you concentrating, let's say, on Nevada or at the US, or could you also imagine to go to Canada or South America?
Yeah, I think the focus for the company is really to stay in those kind of tier 1 jurisdictions, safe, stable, mining friendly jurisdictions. And so, if there's an open pit heap leach project in Nevada, I would jump at it. If it's an underground silver mine in Peru, probably not going to be interested. We want to stick to what we know. Certainly, I think we'd look at Canada. I think from a jurisdictional point of view, there's not a lot of difference in terms of the quality of the jurisdictions. But would we go to Nicaragua? I doubt it.
I think so too. Okay, Golden Eagle. It looks to me like that this is valued with absolutely zero. In your valuation. I think your valuation is still way too low because you have a set no debt, you have cash, you are making money, you are very successful in exploration. But Golden Eagle, there's also a question here from an investor. Why wouldn't you speed up Golden Eagle as a fast or let's say quick cash cow together with Kinross? I mean, Kinross holds 5% on your company, is a neighbor there. Also Hecla is a neighbor. So why wouldn't it make sense to say, hey, wow, we have 2 million ounces here. Let's hit the pedal to the metal and make it.
Yeah, I mean, Golden Eagle is just naturally a longer dated project. It's not permitted. It still needs a fair bit of technical work done on it. It needs metallurgical work to clarify some of the process flow sheets and things like that. But and in Washington State, you can permit mines in Washington State. Kinross was mining there up until 2017. They still have those mines on care and maintenance, but it's going to be a slower process. And also, it really needs those other two companies to kind of come to the table. And we talked to them a lot, but it's been a slower conversation than we would have liked. So we're hoping to get some things there, but just on its own, you couldn't put Golden Eagle into production without at least some cooperation from Hecla. And we've looked at, if you could, and it just doesn't work.
Oh, okay. Interesting. All right. Have you been approached by Hecla already by themselves or with Kinross together? Would that make sense?
We've talked to Hecla quite a bit. We talk to them fairly regularly. We talk to the Kinross guys really regularly because they're shareholders of ours and we know them quite well. And we've told them if they ever want to sell those mines in Washington State, particularly the one that has the mill on it, we'd be interested in looking at it. They've indicated that it's not for sale right now. They're still doing some exploration there as well. So yeah, I mean we're in a bit of a situation where we need the cooperation from those bigger companies. We can't force it, and it's just fortunate that it's a cheap option to hold. That $10,000 a year is pretty manageable.
Absolutely. So what would be the work this year on Gold Rock if you do any?
On Gold Rock or Gold Eagle?
Yeah.
Golden Eagle.
Sorry. On Gold Eagle, of course.
Honestly, I don't think we'll be doing any work on it this year. I think we've got our hands full in Nevada until we can get some kind of a deal with one of the other two companies. I think we'll just continue to hold on to it and leave it at that.
Okay. There is a question from an investor. It looks like there's a small gold rush into Quebec. Do you have any interest there?
It's funny because I'm a Canadian geologist who's never actually worked in Canada, so I'm I'm not that familiar with Quebec, to be honest. I've so yeah. I mean, I kind of watch it, but I think you've got to really play to your strengths. You know, there are companies out there that have, people that have worked all their careers in Quebec. They know the geology. They know what it takes to mine there. Um,
Mhm.
and I don't see how we could compete with that, to be honest. I think it would be challenging at best.
Absolutely. Um, yeah, you got some analysts also following you, as we saw
Yeah.
it in the presentations. What is, let's say, the average price target there, or maybe you can tell us the high and the low if you want, and how did they react on your Q numbers? Sorry.
Yeah, so I mean, I've seen a couple of the analysts put out notes on us this morning. Stifel GMP, Stephen Sook, and David Stewart at Desjardins.
hmm
I think they recognized it was a bit of a lighter quarter, but I think it doesn't undercut their kind of long-term thesis on the company. I mean, we had a fairly light Q1 in last year as well, but a similar production, and still managed to come up with a pretty decent gold production year. Um, and I think, in terms of price targets, I think they're all well north of $2 Canadian. I don't know the exact price targets. I don't worry too much about what the analysts say. I just focus on running the company. But
Yeah,
I think
and you do that really well.
I think they're I think they're pretty solid in their
Mhm,
their analysis of the company.
mhm. Absolutely. No, that's great. Um, Coming back to your shareholder structure, as you have, I would call it like two main shareholders, that's the management and it's Kinross.
Yeah,
And why are you missing institutions or like bigger funds? What is the
yeah,
reason for that?
yeah. It's a great question. There you'll see other companies out there that have large shareholders or large funds that hold a 10 or
hmm
20% position in them. We don't have one of those. Our shareholdings. I mean, we do have institutions that hold us our stock, but not large positions. I think the biggest one is around 5%. Um,
hmm
and it's just really traditionally been a pretty broadly held stock. Um, I think in previous years we had a fairly small market cap and probably didn't have the liquidity that would attract some
hmm
of the funds. I think that's changing. Obviously, we're getting a lot more interest from funds who want to talk to us over the last few months.
hmm
So I think that will evolve as the company grows and develops.
hmm Okay. Um, this leads to my next question. Aren't you then in fear rather than to do M&A to be a takeover target?
It's always possible. I mean, it's the joy of being in a public company is that you are, I mean, our shareholders own the company. If someone came along and made an offer, it's up to
hmm
them really to accept it. It's not a lot. There's not a lot management can do, or frankly should do, to kind of
hmm
disrupt something if it makes sense. And I've been involved with previous companies that have been sold, and it's been very good for the shareholders. I was with Aurelian Resources, which was sold for over $1 billion back in 2008. I was with Dalradian, which was taken out by Orion, taken private. So yeah, it can happen. I can say that we don't have any offers on the table right now,
hmm
but from time to time, people will come and talk to us.
hmm Okay, so then we have an investor from Frankfurt again. He wants to talk about challenges and what are your mitigation plans for the following issues. A, political risk. I think we addressed that already a little bit. Commodity prices connected to political risk. What about C, liquidity risks? Meaning, do you have then, or are you sure that you get sufficient cash flow for the next 2 years?
Yeah, I think we're, in terms of political risk, I mean, I think in the U.S., obviously the
I
events of
don't
the last
see it.
couple of weeks have been a bit tumultuous, but I think that's a short-term blip. I think overall Nevada in particular is a pretty significantly stable place to do mining investment and to do mining. The regulators understand it, the politicians understand it, and it's a big part of the economy.
Mhm,
In terms of gold price risk, generally, I think people who invest in gold mining companies are not looking for hedging. I think they want exposure to the gold price, and sometimes that goes up and sometimes it goes down.
mhm,
Um, we have in the past hedged a portion of our production, and that was mainly when we had a major capital project we wanted to make sure that we were going to have the capital available to fund that project. And we did that once, and it was a temporary hedge, and that's all rolled off some time ago. Maybe in future, if we had a major capital project coming up that we didn't think we could fund out of our current resources, we might look at it again. But we don't see the need for that, in the near future.
Okay. Any chance of a US listing, is an investor asking?
Yeah, we're certainly considering it. There's both advantages and disadvantages to having a US listing. You obviously get into a much more complex and expensive regulatory regime, so it does add to your costs fairly significantly. But obviously, this company is pretty attractive to US investors. It's a 100% domestic US gold producer. It's actually the largest 100% domestic US gold producer, if you can believe it. And so, yeah, that's certainly on our radar.
Okay. Then there is a question. I'm not sure if what the thing is behind. Any thoughts about a listing on the TSX Toronto for more exposure? I mean, you are listed on the TSX, but it's
yeah, on the venture exchange.
Exactly. Yeah. So for the main board, probably he means. Yeah.
Yeah. I think these days there's less difference really between a venture listing and a main board listing. It used to be more of an issue. To be honest, it's something I haven't even looked at. We've more focused on a US listing rather than a TSX main board listing. But it's actually something that I've thought about more. Really just in the last couple of weeks. Somebody else asked me about it, and I thought, maybe we should look into it if it's not a big hassle. It might be worth doing. But again, something to look into.
Is it much more expensive?
I don't know. That's a good question.
Okay. Me too. I have no idea. I'm not an issuer. Yeah. That's right. Let's assume you have over 100,000 ounces production. Everything is in good order and good standing. Could you imagine to pay a dividend?
Yeah, I think we want to have a little more stable, a little more larger production profile before we start looking at dividend payouts. But obviously, that's kind of the long-term goal of the company. To have that kind of stable base of production. And to be able to pay a dividend. It certainly attracts a different type of investor, and which is always good. But yeah, it's something that's a little further out, but yeah.
Okay, super. So from my side, honestly, you answered all questions. I think it was anyhow a very compelling presentation. You really did extremely well here. And just let me double check that I did not miss anybody here. We had that. Yes, that's done. Oh yeah, what are your expectations for gold in 2021? Please give us a crystal ball.
Yeah. Let me dive deep into macroeconomic theory here and tell you why I think gold is going somewhere. Honestly, I don't know. There's a couple of things though that I'm a geologist. I'm not an economist, and I'm not in particular a gold price prognosticator. But I think there's a couple of things going on. One is I think if you look at the amount of money that's being printed, if you look at it just seems like the case for gold from the economic side is good, but also I think what people aren't really recognizing is the supply of gold. I think you're going to see. I think we've reached peak gold, and I know a lot of people have predicted this, but when you look at companies like Barrick producing 5 million ounces a year, how do you replace 5 million ounces a year just to stand still, not to grow, but just to stand still? It's not feasible. And people say, well, yeah, but the intermediate companies are adding ounces and growing their reserves. Well, that's great, but all of the intermediate companies together don't add up to Barrick. So it's just you're going to see gold production dropping off. You're going to see the supply dropping off, and I may be a geologist, but I'm pretty sure supply and demand still works. Even in the gold market. So.
Yeah, absolutely. Me too. Super. All right, Tim, thank you very much. We were a little bit faster than we thought, but I think that's also great. As said, very comprehensive and compelling presentation. Thanks for this. I think you guys did a great job. Fiore looks really good. I'm a shareholder of the company, and I'm a really happy shareholder. I will keep my shares for sure because I see within the next 1 or 2 years really a lot here. And yeah, hang on, what's that? Okay, yeah. And so from that side, all the best, Tim, and I would say keep it going, and we see us hopefully soon. And yeah, have a great day.
Great. Thanks, Jochen. Thanks,
Thank
everyone.
you. Thank you very much. Yeah, ladies and gentlemen, that was our virtual roadshow with Tim Warman, the CEO of Fiore Gold. And you heard it, the company is full on track. Q1 was a little bit lower, but this was as expected. And still, there's a good guidance of 44 to 47,000 ounces for this year for production. And also with the AISC and the exploration running extremely well, I think they will add again ounces here. And also the Pen mine is now at the mine life for 2025. This can really go much longer. And also with Gold Rock as a satellite deposit and Gold Eagle for the longer future, this looks really good. And don't forget, this is a price earning ratio only of 8. This is really super low and to me undervalued, and no wonder all the analysts have targets well above the $2 level. So I would suggest you check out the company. You find this presentation on our website under the Fiore Gold ticker here, and the website is resource-capital.ch, of course. And hopefully we see us all back next week on Tuesday, 5 o'clock, same time. Then we want to talk about silver and Kuya Silver. The invitation is now going out to you into your inbox. Thank you very much. Again, Happy New Year. Stay healthy wherever you are in the world. Have a glass of red wine. That helps a lot against COVID and it's good for the nerves. And I hope to see you all soon. Bye-bye from Switzerland. Ciao, ciao. Thank you. Bye, Tim.
Bye.